they're going to reflect a mirror image of what has been debased against it. That's what's happening, and that will happen. All right. So to answer your question, though, end of year, we're bumping up against or above the all-time high again, and that's what I expect for Bitcoin.
Lavish believes Bitcoin sits in a unique position because of its fixed supply. Unlike fiat currencies, Bitcoin issuance is limited. That scarcity underpins the thesis that Bitcoin acts as protection against long-term monetary expansion. The argument follows this sequence. One economic crisis emerges. Two, governments stimulate aggressively. Currency supply expands. Four, investors seek scarce assets. Five, Bitcoin absorbs capital inflows. This is one reason many Bitcoin investors maintain conviction despite volatility. Lavish expects Bitcoin to revisit or exceed all-time highs over longer horizons because he believes monetary expansion remains structurally inevitable. His outlook is not based solely on adoption. It is rooted in macroeconomics.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think that we resolve the war issue, and that Trump gets his face-saving victory, whatever that may be. And I happen to believe that we're not going to crash. This K-shaped economy is real, and it's just going to keep going for a while. I don't know how long, but I think we haven't. I'm not a one of those guys that's calling for the market to just fall apart here. And caveat, even if it did, we know what happens. There's the Fed and the Treasury are absolutely trapped by Congress. They have no choice but to print more money. It's an obvious outcome. They printed $5 trillion in 21 to 23. They're going to print a multiple of that next time around. If we have a black swan, which, I've been in this business for 30 years and I've seen, I think, 700-year events, so there's another one coming at some point. I don't know when. When it does, they're going to print massive amounts of money. And what's going to benefit from that? Assets that can't be, debased. Things like gold, silver, Bitcoin, like they're gonna just absolutely rip. And of course, stocks will too. Companies that can't just be copied. Things like the Mag 7, and then when Anthropic and OpenAI and all those come to market, and SpaceX, they'll benefit from the money printing. Meaning, just to make this absolutely abundantly clear, that they're going to reflect a mirror image of what has been debased against it. That's what's happening, and that will happen. All right. So to answer your question, though, end of year, we're bumping up against or above the all-time high again, and that's what I expect for Bitcoin. So first of all, STRC, he sells the STRC and he's paying 11.5% dividend on it. So you could either put aside some of the cash that you get STRC as it comes over par, and you can put aside some of that cash, or you can sell common, like you said, but you're buying Bitcoin. When you sell that STRC, you're taking that cash. He's taking that cash, and he's buying Bitcoin, putting that on his balance sheet. So now you've got an asset on your balance sheet that has been appreciating. Not short term. I'm talking long term here. It's been appreciating north of 30% a year since COVID, right? So now you've got this asset that you've got $66 billion or more now of an asset that is appreciating. Now take everything apart, and his obligation to those underlying liabilities for all of his preferreds is currently at, let's see what is, it's $1.5 billion, 1.488. So it's roughly 2% of that stack of $66 billion. So if Bitcoin just appreciates 2% on average over the course of, so let's call it the next 10 years, then he doesn't have to sell a Bitcoin to service that debt. Now, he could sell some of the Bitcoin to take down some of the converts. He could use some of the sales of stretch to pay down some of the converts. And all of that is accretive to the common underlying. So that's why you would own the common, is that you're trusting now you do have to trust. Number one, you have to have high confidence and high conviction in Bitcoin. If you don't have high conviction in Bitcoin, why are you owning MicroStrategy? You shouldn't. But if you do, then you have high conviction that this asset's going to appreciate more than 2% a year, and you're going to get more. I started my career as an arbitrager. Then I did a lot of debt and distressed investing. I mean, God, we owned TWA before the plane crash in 1990. What was it, 95 in Long Island? I mean, 97 was it? God, it was awful. And so all you care about is claims. You claims on claims,
Yeah.
claims. That's all you care about. And it's true. And it's when you're a debt investor, you don't care about anything but what are the claims? Where am I on the capital stack?
And what's the liquidation value?
And what's the liquidation value? So and that's what it comes down to, is if you believe in Bitcoin, you believe that this is going to appreciate. You're getting more Bitcoin per share underlying on this thing. Is it ever going to be liquidated? I sure hope not. But I'm not worried about that in particular. And so that's kind of the play. And so is it something that, look, it's just like you said, it's a little bit of a difference in philosophy, and but we both understand it, and we come from it from different areas. I can see from this point, and I do that work purposefully, so I understand it fully as an investor.
A significant portion of the conversation focuses on the company formerly known as MicroStrategy, now called Strategy. The business model is controversial. Raise capital, buy Bitcoin, repeat. Capital has come from multiple sources, including convertible debt, preferred shares, equity issuance. Critics argue this creates dangerous leverage. Supporters argue it creates amplified Bitcoin exposure. Lavish examines whether this structure is sustainable.
Total of $8.2 billion of converts, and they mature anywhere from 28 to 32. Okay, so let's just talk about capital structure. So, in a company, you've got the claims on assets like we've been talking about, and so for the listeners, the highest claim on asset is basically, it's pretty much bank debt. If you get a line of credit with a bank, you got to pay that back before you're paying anything. And then you've got senior secured, senior subordinate, subordinate unsecured, and then you just go down the ladder. Anything that's a bond is up there, and if it's secured, that means that bond has a secure on a certain asset. It could be the buildings, it could be it could be some of the technology or patents, whatever it is, that it's secured to something, and you have claims on those assets. When you have a liquidation, you're going to you go through a Chapter 7 bankruptcy where you're just going to liquidate it all and give the holders of everything. It goes all the way down the line. You got to pay everybody off all the way down. It's going down to the converts, all those bonds down to the converts, then the preferreds, and then the common. And typically the common is typically going to get a few pennies on the dollar. If you have a bankruptcy, there's not going to be anything left for them. So that's just kind of the way it works. If you liquidated the company now, there would be plenty of claim for the common, but they're not going to do that. I think Saylor's accumulation has been, I think that does give some institutional investors pause for sure. But let's pull apart a bunch of threads here. So number one, Bitcoin's been seen as a risk asset for years here. It's been like the tip of the risk spear, so to speak, for a while. You could argue that it's broken out from that and it's not really correlated to anything, but the reality is it does move around with the NASDAQ quite a bit. And so this last drawdown from all-time highs down to $60,000 or 62, whatever it was, when it touched bottom here, this last go around has been, it happened all before the war, and then the drawdown again in gold and silver. So it's kind of like this hot ball of money is moving around between assets, and Bitcoin had had benefit from it. I think it got ahead of itself, but then again, you had the same thing with gold and silver. So it does, that hot ball of money does move around. It's definitely in the AI names now. As far as Saylor's concerned, I too have worked on this balance sheet quite a bit, and I'm not nearly as concerned about it with as Doomberg is, and probably because I have a higher degree of confidence in Bitcoin as a long-term asset. That's likely the underpinning difference here, is that I just have a much higher conviction in Bitcoin as an asset, as a long-term store of value. The big convert he's got coming up, the next convert he's got coming up is in 2028 for $1 billion. I mean, it's nothing. It's 1 billion out of the $66 billion of Bitcoin he's got on his balance sheet. At the end of the call, I was actually on the call as one of the analysts asking questions, and I asked him, I said, look, you're talking about the fact that you might sell Bitcoin. What do you think is and we've got this new perpetual preferred instrument that has been wildly successful here. What is the optimal structure of your balance sheet? And he answered, and would you be selling off and retiring a bunch of this debt and some of these other preferreds that are just not the core focus? Because the core focus right now is clearly Stretch, STRC, and MSTR, the underlying common. And his answer was he's not going to retire the press because he spent like $1 billion bringing those to market. He's going to retain that optionality. That makes sense. He doesn't have to retire them. There's no reason for him to. He doesn't have to pay them off. But the converts, he wants to retire, and he said he wants to retire those in time, and he's got and they're putting plans around that. So you've got $1 billion that comes due in 2028. That's a short putt here, in my opinion. And then the same thing in 2029, you've got $3 billion. That's his big one. Is he going to refinance that? No, he's going to pay that down. So he's got years to deal with that. And he's got years to build up the cash reserve to deal with it, or just start retiring them, piece by piece. So I'm not as concerned about that at all. Do I think he would startle the market by selling a bunch of Bitcoin in order to do those things? Well, think about it. It's accretive to the underlying shareholders when you're pulling down the enterprise value of the company. And so that's a good thing. The second thing is it gets him closer to having an actual rating that he can point to for the S&P inclusion, because he's big enough. It's just the S&P is basically the credit agencies. They just consider Bitcoin. They don't consider it an asset. They basically mark it to zero. So that doesn't help him. So, but that gets him closer to that kind of hurdle he's got to get over. And so I'm much more confident in his structure, but I'm a lot more probably, I don't know, Doomberg, just how much work you've done on it.
Lavish also discusses Bitcoin's evolving identity. Historically, Bitcoin often behaved like a high-risk technology asset. Movements frequently correlated with growth stocks and major indexes. Yet over time, supporters increasingly argue Bitcoin is becoming digital gold, store of value, monetary alternative, independent macro asset. Lavish acknowledges correlation still exists, but suggests Bitcoin may gradually separate as adoption broadens. Whether Bitcoin ultimately behaves more like gold, technology stocks, or an entirely new asset class remains one of finance's biggest unanswered questions.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.